Hello investors, it's Zil from Equity Master bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. In today's video, I'm going to talk about some penny stocks held by none other than India's largest insurance company, Life Insurance Corporation or LIC. You see, penny stocks attract investors looking for high growth opportunities at a lower cost. These stocks belong to smaller companies and carry a higher risk, but the potential for quick gains can be enticing. Even major institutional investors like the Life Insurance Corporation of India (LIC) include some penny stocks in their portfolios, showing that even low-priced stocks can have promising prospects. In this video, we'll explore the top 5 penny stocks held by LIC. We'll look into what makes these stocks appealing and why one of India's largest investors has chosen to back them. Whether you're new to penny stocks or looking for fresh investment ideas, this list may provide useful insights into LIC's strategic approach to small cap investing. When we say top 5 penny stocks, we are referring to the companies whose share price is trading under Rs 100 and which have a lower market cap compared to their peers. As of June 2024, LIC's name was appearing in the shareholding list of these penny stocks. Now, before we move on, please note this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that disclaimer out of our way, let's get started. First on this list is Hindustan Motors. The company manufactures and sells vehicles, spare parts of vehicles, steel products and components. It also does trading of spare parts of vehicles. It used to manufacture the famous Ambassador car. However, in 2014, the company suspended its operations. In a letter to the BSE, it mentioned that it had very low productivity, growing indiscipline, critical shortage of funds, lack of demand for its core product, and large accumulation of liabilities. It hadn't generated any revenue in recent years and had reported a series of losses up until September 2023. The chances of a turnaround seemed almost negligible. So why does this company make the list of penny stocks owned by LIC? In December 2023, Hindustan Motors turned to black and posted a net profit of over Rs 100 million. The car maker is reportedly considering measures including alternative use of fixed assets to generate revenue. The company's management is looking to tie up with partners and strategic investors for a potential investment who can introduce new products and infuse capital. According to media report, the company is also in developed stages of discussion for a joint venture with a company involved in the electric vehicle segment. Last year, Hindustan Motors informed that it has been trying to revive its legacy as an automaker and looking at entering the EV segment. Later on, it joined hands with Europe's Peugeot and made its foray into the two-wheeler EV space. So, could this new JV turn out to be Hindustan Motors' entry in the lucrative four-wheeler EV space? We'll have to wait and watch. Here's how the stock price has moved over the past 1 year. Second on this list is Orient Green Power Company. The company is an independent producer of renewable power. It is engaged in developing, owning and operating a diversified portfolio of wind energy power plants. Orient Green Power has seen poor sales growth over the last 5 years. Its net profit growth has also not been consistent. However, the company plans to turn this around. This could be the reason why the stock is a part of LIC's portfolio. Orient Green Power Company is set to expand its footprint in the renewable energy sector and has set a target to reach an installed capacity of 1 gigawatt by venturing into a hybrid model of wind and solar capacities or both. The company is planning to increase its capacity to 1 gigawatt from 400 megawatt. In February 2024, the board approved to develop solar energy capacity of 39.6 megawatt in 2 phases of 19.8 megawatt solar power project, each in the state of Tamil Nadu with total investment of around Rs 2.9 billion. Phase 1 capex of Rs 1.4 billion is to be funded from right issue proceeds, while Phase 2 capex of Rs 1.5 billion is likely to be funded by debt. As of 31st March 2024, OGPL's installed capacity stood at 402.3 megawatt of wind power plants across Tamil Nadu, Andhra Pradesh, Gujarat, Karnataka, and also Europe. In alignment with its growth strategy, the company has initiated component upgrades on selected windmills expected to be completed in the next fiscal year. This upgrade is anticipated to enhance power generation in the future. In FY24, OGPL refinanced over Rs 7.8 billion of secured borrowings at interest rates approximately 300 basis points lower. Additionally, promoter loans amounting to Rs 1.7 billion were repaid using the rights issue proceeds, significantly reducing the company's debt burden. Consequently, the company's debt decreased to Rs 7.7 billion in FY24. Down from 10.8 billion in FY23 and Rs 13.5 billion in FY20. The company has also established a debt service reserve account DSRA of about Rs 619 million, bolstering its liquidity position. Note that OGPL's debt to equity ratio now stands below 1 at 0.96. However, the promoters have pledged 59.7% of the company's shares. Here's how the stock has moved over the past 1 year. Third stock on this list is ATV Projects. The company is in the business of rendering project management and engineering services, project supplies, and for executing jobs for various industries. It manufactures critical equipment like energy-efficient mills and bagasse-fired boilers for the sugar industry and spherical tanks for storage of LPG, pressure vessels, hot end spheres, heat exchangers, recreators catering to industries like chemical and petrochemicals, fertilizer, power, etc. ATV Projects sales have grown at a compounded annual growth rate CAGR of 9%, while net profit has grown at 28%. However, this has not translated into healthy return ratios. The company's return on equity and return on capital employed stand low at 3.3% and 2.6% respectively. Yet, this stock is a part of LIC's portfolio. You see, the cost-effective measures taken by the company have resulted in improved performance and quality of equipment supplied. Due to the improved performance, the installed capacity has been better utilized and the management is confident of having improved margins from the orders on hand. The company also has a low debt to equity of 0.25 and no pledged shares. Here's how the stock price has moved over the past 1 year. Fourth stock on this list is Easy Trip Planners. The company is India's second largest online travel tech platform that offers travel-related products and services through its flagship brand, EaseMyTrip. It provides end-to-end travel solutions such as airline tickets, train tickets, bus tickets, hotels, holiday packages, and other value-added services. The company is one of the fastest growing penny stocks and is probably why it's on LIC's list. Easy Trip Planners has seen its revenue increase at a CAGR of 62% and its net profit at a CAGR of 19% in the last 3 years on account of a surge in travel. The company has acquired multiple businesses in the hospitality and travel sectors in the last 5 years to expand its service offering. It recently ventured into charter solutions through its subsidiary Nutana Aviation Capital. It also has a presence in the insurance sector through its subsidiary EaseMyTrip Insurance Broker Private Limited. The company recently made headlines with its decision to enter the electric bus manufacturing sector. It is investing Rs 2 billion over the next 2 to 3 years to develop electric buses. This investment includes research and development, product development, and the establishment of a manufacturing plant with an initial capacity to produce 4,000 to 5,000 buses. Easy Trip Planners is also expanding into medical tourism, a sector expected to grow rapidly. Recently, the board approved acquisitions worth Rs 900 million, including investments in Rollins International and Fliga Home Healthcare. These investments in sectors outside traditional travel reflect the company's strategy to diversify its business and explore new growth areas. Here's how the stock price has moved over the past 1 year. Last on this list is Central Bank of India. The company offers various banking services, including digital banking, deposits, retail loans, and agriculture. As of March 2024, the government holds a majority stake of 93.1% in the bank. The bank was one of the worst performing banks in 2021 with a gross NPAs net performing assets at 16.55% and net NPA of 5.77%. So then why would a large investor like LIC have such a stock in its portfolio? The bank's asset quality has improved with NPAs at 4.5% as on 31st March 2024, from an earlier elevated level of 8.4% as on 31st March 2023 and 14.8% as of 31st March 2022. The improvement was driven by write-offs and recoveries of Rs 100 billion and Rs 17.1 billion respectively in FY24. As on 30th June 2024, the bank's gross NPAs remained stable at 4.5%, while net NPA improved further to 0.7%. Slippages as a percentage of net opening advances increased marginally to 2.5% in FY24 from 2.4% in FY23. Given that a large part of stress in the corporate book is now recognized, slippages in this segment are expected to be lower than in the past. However, asset quality will continue to remain a key monitorable over the medium term. For the future, the bank is focusing on digital initiatives, customer experience, and expanding business reach. It is rolling out new lending products like business loans and housing loans and is focusing on digital channels and video KYC for customer onboarding. The management has an optimistic outlook for the future with plans to capitalize on market opportunities. It is also taking a proactive approach towards regulatory changes and maintaining a healthy balance sheet. Here's how the stock price has moved over the past 1 year. So these were the penny stocks that make up for a significant part of LIC's portfolio. Since we are on the topic of penny stocks, do note that investing in penny stocks can be a double-edged sword, offering the potential for significant returns alongside notable risks. The top 5 penny stocks held by LIC showcase the corporation's strategic choices and highlight the value it sees in these smaller companies. As investors, understanding the fundamentals behind each stock and the broader market trends is crucial before diving into these segments. While LIC's interest in these stocks can signal potential, it's essential to conduct thorough research and consider your own risk tolerance. By keeping an eye on these penny stocks, you might uncover opportunities that align with your investment goals and strategies. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. Have a profitable day and happy investing.